Hello, everybody, and welcome to the Like a Tortoise channel. And before I delve deeper into today's video, I want to say huge congratulations to anyone who has decided to follow me into Ulta Beauty stock. And if that was the case, then you were buying the company at around $357 per share when nobody wanted it. The largest specialty retailer, the largest beauty specialty retailer in the United States. Certainly, they have a moat, and yeah, we were buying this thing hand over fist when nobody wanted it, and now it seems like this thing is going to continue to go much higher. I'm sorry, as a matter of fact, because I couldn't make it into a full position. I started buying around 357, but my goal was to continue to accumulate on the way down. Unfortunately, they reported earnings 2 days after, and the stock was already up 11 or 15% after earnings, and then I never got a chance um, to um, to load back up, and now it seems that this thing is not going to give me any opportunity to do so anytime soon. Never mind, it's still a position in our portfolio, and I'm very happy for it because things have been working out as expected. Okay, but before I discuss this in more detail, let's not forget, I want to make you aware that on December 20th, I'm hosting a live call here on YouTube, and I would love to see you guys. So I would love to hear from you. So if you have any questions, personal questions, professional questions, just try to join the call on December 20th, and as a sign of appreciation, I want to say big thank you, and I want to do that by answering any questions you may have for me. Okay, and questions about like a tortoise, of course, stock ideas. Let's discuss that. So I'm very keen on hearing from you, and so I'm looking forward to that day. Okay, now let's talk about Ulta Beauty. They reported earnings yesterday, and as always, I put everything together in a Word document, right? So I just highlighted the main essentials from both the main highlights from put together the main highlights from both the conference call and the earnings report, and that's exactly what I want to show you guys today. Okay, starting with this. Let me just do this here so you can see everything in detail. Let's hide this as well. And now let's walk you through my main takeaways, okay? And hopefully, I hope everything is clear for you. But as I know you will do, just leave a comment if you find this helpful, okay? Another strong quarter from one of the best-run specialty retailers in the United States. By the way, guys, so for if you are new to the channel, welcome. And if you don't know what the core principles, the core framework of our strategy is, then it's already implied in the name. Of course, slow and steady wins the race. Like a tortoise is the name of the company. But the goal, what we try to do here is we try to buy great companies when they trade at a discount to their real value. And you will find that one of the things that really sets us apart is that we are not what you would call quality investors, where you buy a company at a quality company at a fair price. No, 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 no. We believe that no matter how great the company is, sooner or later they all go through periods of uncertainty. Okay, and that's when you should buy. So we like to buy high quality companies, provided the story has not changed, only when they trade at a big discount to the real value. And that big discount, this is what we like to do, is at least 50%. Okay, 50%. So another strong quarter for this company, Ulta Beauty. And then what happens is you will find the companies in our portfolio that I always make transparent. Ever since I started the channel, and in fact, I will update you on our current holdings in future videos, as well, as we are coming towards the end of the year, and I wanna put out a video is where I just go back to all those investments and break down what went well, what went wrong, and how I'm thinking about adjusting the portfolio going forward. Okay, so I will discuss that as well. But I run a highly concentrated portfolio of a few companies that I have a strong conviction in, and you will see that even though many of them are in different industries, they always have a moat, which they always meet my criteria for quality, and that means because I'm conservative and I demand a lot. Okay, I only want to invest in the best of the world. They are typically number one, number two, or three in their respective industries. Okay, let's carry on. Ulta Beauty delivered third quarter results that beat Wall Street expectations across the board and showed clear execution of CEO Keisha Stillman's Ulta Beauty Unleashed strategy. Only 11 months into a role, Stillman is driving a meaningful turnaround, and the results are beginning to show. In fact, part of the reason that got me excited about this company was, number one, it had a moat. That's the first thing. Okay, it was great numbers. It had been a phenomenal compounder over time. It was trading at a steep discount to my intrinsic value calculation, and it had a new CEO. Okay, so all the ingredients were there for this thing to turn around, and I really liked the fact that Keisha Stillman's had been with the company for so many years. In fact, 10 years, I believe. But she brought a lot of retailing experience as well. Okay, she after working at Target and all other all other great companies. But this is the first time she's the CEO of the company. But Ulta Beauty Unleashed strategy really resonated with me. And I thought she will be able to deliver on it. And sure enough, we are seeing the results. Okay. She's been tremendous at this role. Summary in one line: Ulta delivered stronger than expected sales, market share gains, and higher guidance, reaffirming that beauty demand remains resilient and Ulta's strategic investments are indeed working. So, what were the financial highlights? Um, you can see that net sales increased 12.9% year over year. That was 5% above consensus, which is pretty significant. This was driven primarily by higher comparable sales, the Space NK acquisition, which is a company that operates in the UK. Okay, so they acquired Space NK in an effort to expand internationally, and sure enough, they are doing the same in the Middle East. And that was another thing that I really liked, is that even though the market in the United States is somehow saturated, because this is where the company was only operating in, they are now seeking international expansion, which gives them more runway for growth. New store openings as well. Comparable sales up 6.3% year over year. Average ticket was up 3.8%. Transactions were up 2.4%. What does that tell you? It means that customers are coming more often and spending more, even against the backdrop of softening consumer spending. Okay, and they mentioned this during the conference call. But despite that backdrop, they are still finding they are still they are still willing to purchase, okay, to purchase things around beauty, which proves the stickiness of this industry. Diluted earnings per share 5.14. This was well above expectations, around for well expectations in the mid $4 range. What about margins? You can see that gross margin expanded, all right, 14.4% of total revenues compared to 39.7%, driven primarily by a lower inventory shrink plus stronger merchandise margin. Another thing that is important is that Ulta Beauty has been effective at raising prices. All right. So What happens is they have been raising prices across certain products, and that still and that didn't cause profitability to come down. In fact, even though they are raising some prices, the consumers are still willing to spend them. Okay, don't forget that another thing that they do is they partner with many celebrities to release their own fragrances, and that of course bodes very well for the company. Operating margin, on the other hand, shrunk to 10.8%. It's down from 12.6%. Why is that happening? Because of rising SG&A, right? So they are spending more on incentive compensation, and sure enough, stock-based compensation increased slightly. Payroll, store expenses, and amortization of tech cloud investments. Ulta is spending heavily today to improve stores' digital and assortment, near-term margin pressure, long-term payoff. And this is something that the company also pointed out during the conference call. They don't expect 2026 to be as CapEx intensive. In fact, she mentioned that they want to see the investments that they have been making over the last few years to become solid and start bearing fruit. So we are not expected to see margin deterioration into 2026, which is a positive thing as well. Okay. This is some of the main highlights here. I just underlined this stuff. So important things to notice here on the income statement. Look at gross profit. Okay. Also look at the selling, general, and administrative expenses. You can see that they jumped a lot, which put downward pressure on operating income and in the margin as well. But you can see, so these were the things that I wanted to flag here. With regards to look at the breakdown of the revenues. This is how the company generates most of the revenues. You can see that cosmetics are by far the largest revenue contributor. Okay, so they represent about 41% of revenues as of November 1st, 2025, followed by skincare and wellness, hair care, fragrance services, and other. Okay, people are willing to spend, and we will talk about this as well, as because they mentioned that they saw attractive growth across these segments as well. All right, balance sheet and cash flow statements. What are the standouts? Inventories were up 16% year over year. Why was that the case? Is this a case for us to worry? Not really, because remember that they needed to increase inventory exactly to support the Space NQ integration. And in addition, they opened 63 new stores and new brand launches. So of course inventories should go up. That's a positive. Um, and because revenues are also improving. All right, so if you see revenues stagnating or going down while inventories are going much higher, that can be a red flag. Short-term debt, this is probably one of the things that I didn't like. Short-term debt almost tripled from 199 million to 551 million. The company, what's the main reason for that? Is because the company is tapped the revolver for working capital, buybacks, and capex. So they borrowed short-term debt, all right, to fund buybacks, capex, and working capital needs, which understandably adds some balance sheet risk if growth slows or rates rise. Um, what I would say here is that this Ulta Beauty is a very profitable business, and so I'm not worried about this short-term debt going up here, because, as I explained, so the company has a mode. They generate a lot of free cash flow. Okay, even though free cash flow has been negative this quarter strategically, because remember, they are investing a lot into capex, tech infrastructure, and so it's understandable. But the we I do believe that these investments will turn into profits over time, and the company will have plenty of capital available to pay down all of the debt. Okay, so I'm not too worried about this, but it's something that we need to keep on our radars going forward. All right. What else? So this is the consolidated balance sheet. As always, I underlined the most important things that I want us to pay attention to. Look at cash and cash equivalents. Okay, look at that. It declined substantially. The reason for that is because the company has used part of the cash position exactly to fund growth. And Okay, so it's not only to well, they used part of the cash position to fund the acquisition of Space NQ in the UK. Okay, look at merchandise inventory. We discussed that it went up, as you can see. Look at goodwill; it went up as well because they acquired Space NQ. And what's goodwill? If you are watching this channel for the first time, goodwill is essentially the excess that they pay for a company. Okay, the excess. So it represents the exceeding amount that they pay for a business relative to their book value. Okay, and I can tell you right off the bat, after doing my due diligence, that they acquire Space NQ for about 22 times the company's fair value, which is typical across the retail space, because Space NQ has brand value. Okay, and that is all things that are not built into the net value of the company, so it's not on the books. Yeah, to put it in a simple way. Okay, so I don't think the company overpaid, and I think it's in line with what other companies have paid as well. For example, LVMH, which is also a retailer and does a lot of acquisitions, and so it's not a red flag. And so what we want to see is if there will be any impairment going forward. Okay, we want to see that Space NQ actually delivers. Okay, and on that, well, delivers or continues to create value with customers, which will ultimately translate into higher profitability and revenues for Ulta Beauty. Okay, so let's continue on acquisitions. Here we go. Look at that. The company acquired 100% ownership in Space NQ, a luxury beauty retailer operating in UK and Ireland. The acquisition was funded with cash on hand and borrowings under the company's existing credit facility. The acquisition is not material, so that's why you saw cash and cash equivalents going down and the debt going up as well. Okay. What about the cash flow? Well, what about the cash flow statement? Look, these are the operating activities. Let me expand this here. A few things to notice. Look at stock-based compensation. I highlighted how this went up, but you can see that this is very low relative to revenues. Yes, it increased, but that's fine as long as the percentage of cost-based compensation relative to revenues and operating cash flows are quite low, and that is the case. And so I'm not worried about that. In fact, if you can see that in the case of revenues or even operating cash flow, I think it's under 5%, which is minuscule. Okay, so net cash provided by operating activities was this much. Okay, November 1, 2025. Net cash used in investing activities went sharply higher, exactly because of the acquisitions. Okay, and the net of cash that acquired. So it makes sense, right? They funded that acquisition and so it makes sense for the net cash used in investing activities to become more negative. Financing activities, that includes borrowings from short-term debt. Look at that. Okay, repurchase of common shares. So these are things that I flagged here. In these are numbers that have gone up as well. And another reason why I decided to buy Ulta Beauty initially is because this is a cannibal stock, and you should pay very close attention to cannibals. In other words, to companies that are buying back their own stock. If you don't know a cannibal, let me make it clear for you. If I go here to our stock unlock analysis tool, our stock unlock platform, you can see that Ulta Beauty. I want to show you this. Let's go to financials, and now let's go to here over here, and look how beautiful this looks. What am I doing? No, income statement. Okay, look at that. Diluted shares outstanding. Look at that. Since 2021, the share count, they reduced the share count by about 17%. Okay, and if I continue to go down, look at that. This company, since 2015, has reduced its share count by 27%. It's a cannibal stock. All right, and they were buying back a lot of stock as the stock continued reached low valuation levels back in 2024, as you can see right here. Okay, so let's continue with our due diligence. So I showed you that store growth, 28 new stores opened in quarter three, which means that in total they now operate 1,500 Ulta stores in the US, plus 84 Space NK stores in the UK and Ireland. And even more bullish, they decided to raise guidance. They increased full year sales, comparable sales, margins, and earnings per share guidance, all comfortably above consensus. So this is not a case of beating an easy bar. Ulta is resetting expectations higher, signaling strong confidence for the holiday season and into 2026. Guys, retailers in the United States are struggling to keep comparable sales flat. And Ulta Beauty is not only increasing them, they are also beating their own expectations. That's staggering. Okay, look at this. So you can see right here, the revised updated fiscal 2025 outlook compared to prior fiscal 2025 outlook. Look at the changes. Comparable sales, higher. Operating margin, they were guiding for 11.9 to 12. Now they are guiding to 12.30% to they're guiding between 12.3% to 12.4%. And they revised guidance higher for diluted earnings per share as well, as you can see right here. Okay, pretty awesome. So let's discuss some of management commentary and key takeaways. Demand remains resilient. Strong comps across channels and categories, very important. Market share gains in both mass and prestige beauty. So how do they? What kind of products do they have? They sell mass products and prestige products as well. Okay, so they serve essentially they serve people with different incomes, which is something that I really like, and they saw strong growth across both products. Shoppers continue to spend on cosmetics, skincare, and fragrance despite macro softness. Here is the stickiness we were talking about. She brought up the consumer behavior, some weakening in confidence. However, she mentions that customers still engage when value is clear. Okay, so this is why Ulta has been focusing a lot on new product assortment in refreshing its stores and investing a lot on e-commerce. Okay, to deliver a more personalized experience with customers. So Ulta's refreshed stores, exclusive brands, and bold marketing are keeping traffic strong. All right. Product and category highlights: 35 new brands launched. Many of them are exclusive. Expansion into wellness, a large untapped market. This is another growth driver going forward. Okay, so they have been operating in the beauty space, but they believe, Keisha mentions this many times. She believes that wellness and beauty go hand in hand, and so there is absolutely some synergies here, which is why they want to expand into this untapped market. Strong growth in e-commerce driven by improved digital experience, loyalty, personalization, as I discussed. Investment cycle 2025 was a heavy investment year. Tech stores marketing 2026 will not see the same level of spending, meaning EBIT margin should stabilize. Past investment should begin to drive operating leverage. And this is what I will be eyeing going forward. Okay. My take: Ulta delivered a clean beat, raised guidance, expanded gross margin, and continues gaining market share in one of the most resilient consumer categories. Short term, SG&A pressure is real, as we saw. Free cash flow remains temporarily negative, but the long term is, and we know that we are always focusing on the long term. Strong category, this is what they are working towards. Expanding loyalty program, exclusive brands, digital transformation showing results, margin expansion expected in 2026. So they continue to prove why they are one of the most reliable, high quality compounders in US retail. And this wraps up our summary right here. And as you can see that the stock is up about 6%, if I'm not mistaken, 6.07%. And this means that this triple top for you guys, technical analysts who are probably selling around these levels. I mean, if this thing continues to go much higher, then you're going to have to cover your losses. Okay. That's why I don't really pay attention to technicals, because technicals are important if you are focusing on the short term. Fundamentals are important if you are focusing on the long term, and that's what really matters, because over time the stock price will always follow the evolution of the company's intrinsic value. All right. Let me know in the comments if you enjoyed the video, if you want me to put out more content like this one. As always, thank you so much for the ongoing contribution, and your support. And yeah, just look, if you don't know where to, if you want to reach out to us, you can join our school community. It's completely free as well, and you will find the link in the description. So let's stay connected, and have a beautiful rest of your Friday, and have a great weekend.